Broadcasting live from the Business RadioX studio, it's time for Family Business Radio. Showcasing outstanding family businesses and the advisors who assist them.
Good afternoon. You're listening to Family Business Radio. I'm your host, Anthony Chen. Today, we have two esteemed guests with us on the show today. We have Jane Gentry with Jane Gentry Company and Robert Stevens with CFO Navigator. To kind of start us off with the show, Jane, welcome to the show.
Thank you. I'm esteemed.
Yes, of course. So kind of share with our audience, our listeners, kind of your origin stories as to what got you into starting your business.
Wow. So I'm old, so it depends how far back you want to go. My first career was as a professional actor, and I eat much better now than I ever did back then. I started my career in sales and sales leadership, started my practice in 1999 with a break to run some companies. And back before 99, the work that I did was predominantly with large organizations, Coca-Cola, Philips Medical, Mercedes-Benz, Home Depot, a lot of our Atlanta favorites. And after I went to run a couple of small businesses, I really felt the short story is the businesses that I ran were owned by an equity group that had purchased up several family businesses. And I was less than thrilled with how those families fared at those deals. And I realized that many people start a business because they have a giftedness or a passion or something. And a lot of small and mid-sized businesses can be under-resourced. And what I mean by that is not financially under-resourced, but you have a thing that you're great at, and you don't have the resources of a Coca-Cola to know, where do you find a great CFO like Robert Stevens? Where do you get a wonderful business attorney? Where do you get a good wealth advisor, right? Mm-hmm. And how do you solve the right problems in your business? And so we adjusted the practice to serve small and mid-sized business owners and really help them get their businesses to a place where when they decide to turn it over to the next generation, or they decide to sell it, it is in the condition to get them the most value for the effort for all the years that they put into that business.
So for our listeners, what they're kind of wondering, when we use the term small and mid-sized businesses, what does that mean for your practice?
Yeah, I agree with you. That's a thing that means a lot of different things to different people. For us, our sweet spot is, I would say, 5 to 50 million, but we do work with companies upwards. And in fact, I have a client right now that's $150 million equity-backed company that's combining 3 manufacturing companies into one.
Mm-hmm. Now, you mentioned in terms of getting the business to help them be put in a position for either succession towards the next generation or perhaps an outside buyer. Kind of share with us, what is the common things that you see that a lot of these business owners are facing challenges that they were not aware about until they come to that point, and how is it that you would go in to help them fix it?
Yeah, so it could be any number of things. And I think the thing that we are the most gifted at is helping our customers see what are the buckets that need to be worked on in the business and in what order, helping them prioritize the problems that actually need to be solved. Sometimes it is that the business is not set up financially in the correct way. We have a client that inherited a business that's wonderful, but the books were completely buggered up. So there was no idea what kind of profitability they actually had. And so in that case, we would bring in a CFO partner like Robert. I sound like a commercial for Robert Stevens.
Keep going, Jan.
You're going to owe me.
You're going to owe me a little bit.
Yeah, you're going to have to pay that back. At any rate, it could be the books. It could be that your strategy is weak. You haven't kept up with the changes in your market. And so your business doesn't have legs for an investor or a buyer to want to come and purchase it. It could be your sales strategy, that there isn't one, or there isn't a well-defined strategy, or it's the wrong strategy. I see a lot of small businesses have people in the sales function. They give them a sales title, and they're not salespeople, right? So it could be the sales function. It could be the things that they're focusing on in their business. We see, if you listen to any podcast that I'm on, I'm usually telling people the number one thing that I see business owners knee-jerk to are kind of the things that that are not the most difficult things in the business, but they're the things where you can look at something and maybe hold it in your hand or see it on your computer and go, Jane, look at this thing that we did. Isn't it amazing? Things like your website or branding, right? Which are important, but they're not the most important. And so if you are solving for marketing when you don't have a strategy, or you don't know what's happening in your market, you haven't defined your customer well, then you are putting that bucket in the wrong order. And you're just going to end up redoing it. Does that make sense?
Yeah, so it's almost like getting distracted by the flashy and nice things. And it's coming in from the fitness perspective. It's like, oh, I'm going to get this flashy gym equipment, spending several grand, but then after maybe one or two use, it's just sitting there in the room. It's not being used.
Well, I call it shiny object syndrome. And, anymore, honestly, your website's not the first place people go to find out about you or your company. So it could be your sales strategy or your sales and marketing strategy, which should be done together. So there are a lot of different places where we see opportunities for our clients to improve the way their company looks to a buyer, or just improve the way their company is functioning.
So it's almost like you're coming in doing a diagnostic on the company on the whole aspect, not just on the financial reporting, but rather if they have a marketing strategy or not just a website, because I think a lot of people mistake having some kind of logo or a website with a actual marketing strategy.
Yeah. So, for example, I've seen people spend hundreds of thousands of dollars with companies that say, "Oh, well, we think you should change your name," and you're going to find I'm a really straightforward person. I'll say to them, "What? Your name is so far down the list of things that I think are important, I can't even see it." Right? A business is $5 to $50 million. You don't have the brand equity in the market that a Coca-Cola has, right? Or a company like that. So it's understanding what are the major things and majoring on the majors, right? So yeah, you're right. It's about building out a complete strategy. Do you think you want to have your next generation own your business? Do you want to leave it to your children? One of our partners is a specialist in helping upskill the next generation and having those hard family conversations about what it's going to take and when it's not the right choice to have the next generation run your business. When is it the best choice to get an outside person? So we try to come in and address that kind of the whole ecosystem of the business and solve the right problems. Some problems are just not worth solving, right? So we go in there and do a diagnostic and decide what are the major things, what is the order they need to be solved in, and then we dig in there and help them solve for it.
So kind of give us, for our listeners, a quick example. If you were to look in, and what do you find to be the top 3 most common overlooked big elephants in the room that needs to be addressed, but they're just not really looking at it?
Yeah. Haven't come up with a sound financial strategy. Don't have an obvious or well thought out sales strategy, or wrong people in the wrong roles in an organization. I would say those are 3 big ones. Or right people in the wrong role.
Mm-hmm. So take us through when someone's coming to you and they're thinking, all right, I would like to say, pass on my business to the next generation. I'm the 2nd generation in, and they kind of feel that pressure to make sure that this next transition is just as smooth as when they received it. What does it look like in that initial process, that conversation?
Well, yeah, you know that most businesses don't go past that 2nd generation, right? They don't really survive it without a plan or without some advisors. And, Bill on our team, Bill Smith. This is Bill's expertise and his life. So we would pull Bill in early on to a conversation like that with the family, and lay out a whole plan for what are the skill sets that next generation, that, like we call them the next gen, what do they need? What do they have? How will we develop a plan to skill them up? He's fantastic at mediating hard family conversations. The family business is a very different dynamic from, say, the business I explained to you, where 3 manufacturing companies are trying to figure out how to come together. What does that look like, right? It's a completely different dynamic. So we bring in an expert that's what he does. I'll bet you've had him on your show already, haven't you?
Actually, I think it was about 2 or 3 episodes ago. Yes. So, but before we kind of close out here, so as our listeners kind of exploring, okay, they understand that there's a different dynamic between family and business, or just kind of a more, I guess, corporate store environment. And the example you gave, 3 manufacturers coming together trying to figure things out. Okay, how do we make this work? At what point during the business owner's life cycle or their business life cycle should they reach out to someone like yourself to begin the conversation in terms of succession planning?
Yeah. Succession planning or selling your business, for succession planning, I think you should start as early as possible, right? We find that a lot of family businesses, I happen to be working with a family business right now where the current president was a family member of the former president, but wasn't really given any autonomy in the business, wasn't given much of a leadership role in the business, wasn't allowed in the books of the business, and then the owner died.
Oh.
And so now you've just tossed a very bright, completely capable person who has not been equipped properly to run the business that you built. I'm sure he didn't plan on it going this way, but so we're having to kind of help her to understand what are the things you need to be focused on. We're helping to build her up as a leader. At the same time, we're looking into a business that was really poorly run, has a lot of potential, but it wasn't run well. So if you have family members in the business, that's the time to start upskilling them, is right away, having a plan for what does the future look like in your business. It's different in the family dynamic, Anthony, But really, I see businesses where, I mean, if you want to use this manufacturing business as an example, it's one business that is growing through M&A and bringing on other businesses where people are critical to the business, but they have not been trained to do the job that they're sitting in. And so that's a really hard dynamic for any kind of a CEO or a leader to realize I've got this organization, or I've got these people that I have to have in the business because culturally they're ingrained in the business. From a legacy perspective, they've been in the business so long that they're where all the knowledge lives in the business, but they're not skilled to do the job that they're doing in that business. So it really, I see that in all kinds of businesses, not just in family businesses, where we end up with people in a role and we have to have them there for one reason or another, right? An owner wants them there because they're a family member, or they have to be there because they're the guy with all the knowledge in their brain, but they're not equipped. So we run into that in all kinds of scenarios.
So then for our listeners who are just kind of getting the tip of the iceberg here of all the aspects that comes into a sound succession plan and being able to have someone come in and do a diagnostic of where they are, how can they best find you and reach out to you?
I'm not that hard to find. Jane at janegentry.com. The website is janegentry.com. On LinkedIn, I'm Jane M. Gentry. But if you Google Jane Gentry, you'll find me.
All right, great. Well, thank you, Jane.
My pleasure.
All right. So next guest, we have Robert Stevens with CFO Navigator. Welcome to the show.
Thank you very much. Glad to be here.
Great. Well, kind of share with us kind of your origin story. What got you to find CFO Navigator?
Well, my origin story kind of has two components. There's the inspiration, and then there's the catalyst. The inspiration came with my first CFO job in corporate America. Was brought in with a growing $25 million company. CEO was looking to me to establish all of the financial capabilities, the reporting, the budgeting, all of that. And we would have monthly one-to-ones at Starbucks. And I would kind of tell him what we're working on, where we're going. And after, a handful of those meetings, he finally just stopped me and said, Robert, I trust you. I trust that you got all that blocking and tackling. I know you're going to get the numbers right. I'm scared to death. I'm driving this business as fast as I can, and I'm scared to death I'm going to drive us off a cliff. I need you to help me look through the windshield and anticipate what's ahead before I run over it or run us off the cliff. That was a light bulb moment for me. That's when I realized the difference between a controller or an accountant, which looks in the rearview mirror and just tells you what the numbers were, and a CFO is looking through the windshield and anticipating what the numbers will be in order to help navigate the business. So those words all came into my vocabulary after that conversation. The catalyst came a few years later when the Great Recession hit. The consulting business just kind of shriveled up all at once. Big financial institutions said, we don't need your consultants to come back anymore. Mm-hmm. The business kind of was on a free fall and stabilized it to some point. Went through a few more months, and then finally he was at lunch with the CEO, and we had that conversation. Robert, thanks for all you've done. Mm-hmm. Couldn't have made it this far without you, but I can't afford you anymore. Mm. So that was the catalyst to allow me to start to think about, okay, I've got this vision of what a CFO should be for one of these small, mid-sized businesses that we were talking about. How can I bring that to more than just one employer? And, through working with Vistage coaches and others, was able to come up with this model that I have now, which is bring that same corporate America CFO perspective to local Main Street companies.
Mm-hmm. So talking about being able to view through the windshield rather than kind of the rear view mirror. So for our listeners listening in, we've still got several weeks left of the year. Some people have already checked out, but we do still have several productive weeks. What would be your year-end advice to our listeners?
Well, there's a couple of things that I would want to mention. One is with the the remaining weeks that we have, take a look at your financials and anticipate what you think you're going to make at the end of the year. How much are you going to have in revenue? And ultimately, what is your profit going to be? We're only a few weeks out. It should be fairly easy to guess. If you haven't already, then have conversations with your tax provider, tax preparer, and ask them, are there any things that you can do before New Year's Eve that could help mitigate your tax liability? Example might be if you need to purchase equipment or buy new vehicles, potentially, and again, I'm not a tax guy, but this is not tax advice, but I encourage you to talk to yours. You may be able to buy some vehicles or buy some equipment that can be fully depreciated before the end of the year. The key there is midnight on New Year's Eve. If you haven't made the purchase before you blow the whistle for 2023, it might be too late. Those purchases would roll over into 2023's tax preparer. So that's the first thing, is look to the end of this year. But also the second thing I would say is use this time to look forward into next year. Look into 2023 and think about your budget. A lot of people might be intimidated by the word budget, but a budget is simply an expectation. What do I expect to sell? How much do I expect it to cost me? And what do I expect to make in profit? At least start with that so you have a benchmark to measure your performance through 2023. How close are we going to get? Are we on track to hit that budget? If not, what can we do now to make some changes in order to better prepare us to make that budget? So it'd be those two, looking immediately for year end and then forward into next year.
Well, then, since we're on topic of looking forward into next year, I mean, just continue to talk, whether someone's listening to CNBC or reading links or posts on LinkedIn. There's yes, maybe, no on the whole recession bit. That's the elephant in the room, along with kind of the interest rates going upward and then the whole inflation, everything that's possibly going around in the back of the business owner's mindset. What would be your advice to the clients that are kind of going through a lot of uncertainty and how they can actually prepare and, as you say, project into next year?
Yeah, exactly. So we've seen the interest rates, we're feeling the inflation, and that's all on the heels of a potential recession. I read the same things you do, see the same things, projecting a slight recession next year. I'm giving clients a couple of pieces of advice around that. One is a couple of years ago when we had when we couldn't get inventory from China, when we weren't able to get ships in and we weren't able to get product, a lot of companies were hoarding inventory, buying as much as they could. What I'm telling clients now is you need to make sure that you can turn that inventory as quickly as possible and maybe not keep so much on the shelf, because inventory is really just cash on a shelf that you can't get until you sell it. So try to keep your inventory at a low level is one. And two is, now that we're planning or potentially running into a recession, let's think about what we can do about our receivables. Make sure that our accounts receivable are current, because as the economy starts to slow, companies are going to first start to slow pay their vendors. You want to be the squeaky wheel, is what I say, is you want your customers to know that you are watching, you need them to pay. You want to be paid first. You want to be that squeaky wheel that they don't want to hear from. So if they do have to start slowing down their payments, you're at the front of the line to get paid first, and you're not at the back of the line waiting potentially months before you get paid.
So it almost sounds like at the end of the day, cash flow is king.
Cash is king. In fact, I have a saying around cash. If your business is growing, growth eats cash like a goat eats grass.
I never heard of it, but I'm going to have to steal that. Yeah.
You better be able to feed the goat if you're growing. So cash is always king.
So then, for those who are kind of hearing this for the first time and preparing the business, at least on the financial end, what would be kind of your advice now that you brought up, okay, get in front and let your clients or vendors know that, hey, you want to be ahead of the line when payment comes. What is one or two techniques that you would share in advice to your clients? Relationships.
Have a personal relationship with whoever's paying the bills on the other side of the phone. It's easier to ask if you personally know an individual. It's not just company to company. It's now, I know Sue or I know Bob. Hey, Bob, can you help me out here? This receivable is getting close to 90 days. We need to get this thing paid. Can you get me at the front of the line? It's the personal relationships that really push you to the front of the line.
So relationships, anything else, or is it just that is your first go-to? That's
probably the most effective go-to. The second might just be frequency. Call them every week. If there are slow paying, call them every week and let them know that you're paying attention and that you're the squeaky wheel. They want to get rid of you first.
Then is there any value to potentially giving, let's say, 1 or 2% discount in terms of if they pay early, right from the get-go, or is that just kind of devalue the service or products that you're providing?
I wouldn't recommend coming out of the gate with the discount. If they're slow paying, maybe offer that as a sweetener to get them to pay earlier. The reality is if someone's not paying you on your terms, they've got other problems going on. So 1, 2, 3% is probably not going to be enough incentive to get them to write the check.
Okay. Then looking elsewhere, so we kind of addressed a little bit on the elephant side of things. Now, under normal circumstances, when someone's coming to you for advice and giving them guidance to run their business, what are the top 3 things you look for right away that you think business owners are also missing out on but can quickly fix?
Great question. There's the cash. It's usually always first cash. If they're growing, they don't have enough of it. So helping them secure lines of credit or, improve their turn time on their receivables or their inventory to bring in more cash quicker. That's typically the first thing. The second thing is I want to look at their profitability. How profitable are they? Do they have unprofitable products or services? Can we turn our attention from those to the more profitable one? Kind of the low hanging fruit. And the third would be expenses. Are there any unnecessary expenses? Is there something that we can cut, we can hold back on, postpone perhaps? But all of that is intended to increase cash flow.
Then on topic of the goat that needs to be fed a lot of grass as they're expanding, there's kind of 2 different perspectives as I'm kind of reading through all these articles and kind of quote unquote business gurus where they talk about kind of battling or batching down the hatches, and the other is no, this is time to really not just build the cash but get it ready with capital to immediately deploy once everyone else is pulling back. What is kind of your perspective on this and planning ahead for a business?
I'm never a fan of sticking your head in the sand and trying to avoid. There's an old saying: you can't cut yourself to prosperity. You can't cut expenses to be prosperous. You've got to stay focused on the pipeline. You've got to continue to focus on growing sales, increasing revenue. There are some things that you might be able to do to augment that with expense reductions and the like, but I don't ever encourage a client to take their foot off the gas pedal of pipeline and increasing sales.
Is there a common mistake that you find then for business owners when times are getting a little rough that they make the first cut at some place that should not be cut?
Their people, right? It's their people are their greatest asset. A lot of times they'll say, well, what does Sue do? What does Bob do? Do we need that? Let's let them go. Maybe is probably the right answer. Look for other areas, other things that might be short term. Are there some things you can do short term that might free up cash that won't require you to make such a painful long term decision as letting someone go? Assess, analyze, and don't just knee jerk and immediately let people go.
Then on the flip side, as a business is looking to grow, sometimes they may jump, as Jane mentioned, kind of the shiny item syndrome. What is one mistake that you find a lot of business, once they get a surge of cash, they go and spend on this large project when they really should be focusing on something else?
Well, hopefully they have a good CFO that can help them stay between the guardrails. That's probably the key, is having someone to help them stay between the guardrails. That's not to say they couldn't make an investment, but looking through the windshield, if we're going to grow, how much are we going to need 3, 6, 9 months from now? Where's it going to come from? You got to know where it's going to come from, because you got to feed that goat. It's either coming from your pocket or someone else's pocket, an investor or a lender's pocket. So hopefully someone's keeping them focused on what's ahead for the current business and maybe rein them in a little bit on the shiny things.
So in terms of kind of the blocking and tackling, you mentioned right away is getting you to the cash flow, getting you to the vendors, and then finally look for any short-term, quick, I guess, expense cuts, but not look at the people because they are the asset at the end of the day for the business.
Look at the people last and look at them very closely. Are you making a short-term decision that it's going to have long-term ramifications? The right answer might be you have to let people go. That's just the reality of business. But look at that very carefully.
Right. Well, then, looking further ahead in the future, let's say we fast forward 2-3 years out when we kind of get past this storm. Because I know with your experience, this is definitely not your first rodeo.
That's right.
Kind of guiding the business through this. What is 1 or 2 things that you can help your clients, or particularly for our listeners, to kind of wrap their hand or view through a different perspective to prepare and then being able to understand, okay, this storm will pass. What should I do like right now to prepare myself for growth 2 years out when the storm does pass?
Business is cyclical. It's like a radio wave. There's peaks and there's valleys. There's peaks and there's valleys. There always have been, there always will be. So if we're in a valley, start anticipating, looking for, planning for what happens when we start to hit the top of that mountain peak again. Mm-hmm. What is it that we want to be positioned to do? Where are we going to get the capital for that? What is it? Don't just stick your head in the sand because you're in the valley. Start planning for what you're going to do when you get to the top of the mountain. It's different for everyone, but planning is huge. It's Winston Churchill's famous saying, those who fail to plan are planning to fail. Mm-hmm. Absolutely. When times are tough, plan for when they're great.
Mm-hmm. Okay, great. Well, that is, or using your goat analogy, that's the time you start fertilizing the grass to prepare that's feeding of the goat, right?
That's a good way to think about it.
Great. Well, then how can our audience and listeners best find you and get some advice and guidance to their financials and growth of their business?
Well, they can learn more about us at CFO-Navigator.com. My email is robert@CFO-Navigator.com. And my cell phone number, you can call me directly, 404-642-2688. Be happy to have a conversation.
Great. Thank you.
Thank you.
So you've both you've heard it from our 2 esteemed guests in terms of how they can best prepare or things they should look for when beginning that conversation of succession planning. And also, don't just look at the rearview mirror when driving, because you might inadvertently drive off a cliff, but look through the windshield once in a while. So our bring back question for our 2 guests is, as the year is kind of closing out and going to the next year, this is particularly more for our listeners here, as they're kind of either on the fence and kind of choosing how they want to take the direction of their business, or even the person that's kind of thinking, you know what, I want to open my business, but now that we've kind of discussed this elephant in the room where, I have to deal with this, like succession planning, I have to deal with financials. This is like way over my head. As Jane mentioned, a lot of people go into business because they're passionate, but they're not exactly trained in all of these things. So the 2-part question is, 1, for the current business owners is, how can they best prepare the business in terms of moving to the next step forward, the next phase? And then the second is for those who have yet to start their business and they're on the fence and they right now kind of listening in, oh, wow, this is a lot more complicated than I thought, than just kind of chasing my passion. Where do I start? So those are 2 questions. Yeah. All right. So
Robert and I could go at this all day.
Oh, yeah, absolutely. Well,
like he's talking and I'm like, I'm like Horseshack over here. I just totally aged.
I got it.
So we'll bring you right back at this, giving you both time to kind of think over your answers. So this is kind of course, for our listeners that are frequent listeners, is kind of the legalese portion of the show. Sponsored and brought to you truly, Anthony Chen, myself, with Lighthouse Financial Network. Securities and advisory services offered through Royal Alliance Associates, Inc., RIA, member, FINRA, SIPC. RIA is separately owned, and other entities and or marketing names, products, or services referenced here are independent of RIA. Now, main office address is at 575 Broad Hollow Road in Melville, New York, 11747. You can best reach me at my email, which is Anthony Chen, CHEN @lfnllc.com. anthonychen.com or just my LinkedIn profile, Anthony Chen, and that would be the guy with Lighthouse Financial Network. So kind of bring both guests coming back in, Jane and Rob. I know you're going to be serving the tennis ball back and forth. So, so Jane, I know you've been chomping at a bit, so we'll start with you.
So I loved your question about the recession. And the cool thing is economists are kind of like weathermen or weather people. You know, they get to keep their job even when they're consistently wrong. So we try to have an optimistic outlook, but prepare everybody. And I so agree with Robert about knee-jerking to cutting people, especially when the job market is the way that it is, if you've got really gifted people in your organization. The other place I see people knee-jerk that is a huge mistake is sales and marketing. That is the revenue engine of your company. And you need to be increasing sales and marketing during a downtime, not cutting it. The other thing, is to, Robert and I both work with clients to look at their budget. And I imagine we're asking the same question, which is when they come up with this revenue number, I'm like, where's that coming from?
That's the hockey stick, Jane. The hockey stick that just takes off. Yeah, we're going to grow by 300,000% this year. Well, how are you going to do that? Let's bring them back down to earth and talk about the reality of, let's think about that. How are you going to do that? That doesn't sound realistic to me.
So one of the things I like to do is dig into your client base. And I look at a lot of things with regard to your client. I have a client right now with probably 80% of his clients on the way low end of the bucket, right? And one of the things that company is complaining about is their operations are backed up all the time. Well, it takes almost as much effort to flow through one of these little crummy jobs as it does one of their big custom jobs, right? It all has to go through the same process. And so I said, what if you took 25% of those little jobs and moved them into the next bucket? What would that do to your revenue? How do we get your salespeople to sell those deals, right? I'm always saying to clients, comp for the behavior you want. And I disagree a tiny bit with Robert about the 2%. I also don't like to lead ever with a discount because a discount sends the wrong message. We don't discount. However, if you have an existing client, this meeting I was in this morning, if you have an existing client, it's a big company, and they're generally those 90-day companies, I say to my clients, jack up the price and offer them a discount to pay you faster. Because a lot of times a procurement person gets rewarded for the amount of money that they save the company. So there are some times when I feel like you're forced to play that game. But in general, I'm with Robert 100%. Looking forward, I'd say there was never a better time to raise prices than right now. Nobody is asking why your prices are going up. And most of my clients have not raised prices since pre-COVID. So that's one thing you could do right now. The other thing is around your clients, look at unprofitable clients. I would rather you cut an unprofitable client than an employee. And it's hard for a business owner to cut a client loose. And I've struggled with this in companies I've run. We had a huge brand that did $1 million with us. And I said, we're firing that client. And they said, Jane, that's $1 million coming through the company. And I said, yeah. And it's $1,150,000 going out of the company. They're not profitable. So be willing to say goodbye to business that is not good. All business isn't good business.
Those are wise words. Freeing up cash flow. So instead of cutting people, we're cutting bad business. What do you think about that, bro?
That makes a lot of sense. And that's why I was saying one of the first things I look at is profitability. If you've got an unprofitable product, don't keep it just for the top line. The top line is not what goes in the bank. It's the bottom line that goes in the bank. So you've got to stay focused there. And Jane, Anthony, you ask, what advice would I give to existing businesses? I liked what Jane said. I'll add that to what I'd said previously, which is her comment around raising prices. The COLA, the cost of living adjustment that the federal government applies to Social Security every year, is 10.7. Inflation's over 11. I don't think anyone's going to question you if you're raising your prices. So if you haven't done so, many of my clients have, but if you haven't, think about doing so. The end of the year is a good time to do that. And the second part of your question around those considering to start a business, I started my business during the height of the recession in 2009. So it was hard. It was hard work, a lot of sweat to get it figured out. But I always knew, like I said earlier, business is cyclical. We're at the bottom. We're going to get back to the top. What can I be doing now to build myself and to build this business to be ready to take off when we reach the top? So don't not get into business because you're a little afraid of the bottom of the cycle that we're in or potentially going into. Use that as a time to prepare for when it starts to take off.
Well, you certainly got experience going through this roller coaster. It almost sounds like you're saying since we're almost or going to be at the bottom, this would be the ideal time to start because you'll be going on the upward trend 2 years out.
I don't know about ideal, but it's only up from here.
It's only up from
Yeah.
here. And Jane, what do you think about that?
I'd add to what Robert said for existing clients, not just raise your price. Are you charging for the value that you bring? A lot of times when I'm in an organization, I'll say, well, that is a really value-added service. You should be charging a program management fee for that. Or doesn't it cost you a lot to kick off that program? You should be charging a startup fee for that. People are afraid a lot of times to charge for the value that they bring to a client. And as long as it A, is value, and B, we know how to position it, it really raises the amount of revenue in an organization. What I would say to a beginning business owner is no wise business owner at any level of company tries to be the captain, the first mate, the engine guy. I don't know. I shouldn't have started with that analogy because I don't know how to go anywhere further with that, but I should never started with mechanics. Anyway, it's wise to find yourself an informal board of directors or board of advisors. When I first started my practice in 99, I brought a group of people together for a full day. The first half of the day, we talked about my business, and I told them what I was going to do and what I thought the value was. And they asked me a lot of hard questions and gave good advice. And then I took them on a golf outing as a thank you. But the only thing they had in common was they were smart people from diverse backgrounds who cared about my success and therefore were willing to ask hard questions. And so if it's not a group of paid advisors like Robert and I, that's okay when you first start out. You do need to get wise counsel from at least an accountant, right? And a lawyer, but find a group of smart business people who you respect, who care about your success, and leverage that as you start off.
Thank you. Any parting words from you, Robert, as you started your business journey?
I think having outside input is huge. There's an old saying, a golfer can't see his backswing, right? So having someone there to see what you can't see from a totally different perspective, that's very valuable.
Well, great. Thank you. And Jane, as you were talking about charging for value, I our listeners can't see here, but our producer John Ray, he lit up like a Christmas tree. Of course, this being the season, and I know this is not typical, but John, I want to bring you in. What do you think about in terms of finally charging what your services and values are?
I couldn't agree more.
Anything else you want to add to our listeners coming in?
I think Jane and Robert were quite eloquent on that.
Okay, great, thank you.
I'll give you another quick example because I know your listener base is very diverse. But I have a client who sells aftermarket parts in manufacturing plants. And usually those people call when their equipment breaks down. And that's how he gets business. And I said, how many people do you have out in the field? And he talked about how many people he had in each region. I said, well, would it be valuable to your customers if you were able to do some kind of an audit for them or an equipment inspection that would let them know when these parts are going to fail, much like when I take my car in for my 20,000, 40,000 mile service? He said, yeah, that would probably be a high value to them. And I said, would it be a high value to you? And he goes, yeah, we'd sell stuff. Okay, do you think you could charge for that? Yeah. So as the recession is this ghost that everybody is worried about, this company is being proactive with companies who don't want to make big purchases in the next year or so because they're afraid to go in and audit, get paid to find ways to sell their product. And so there are a lot of ways that companies can add value and get paid for it.
And this is a time for innovation, especially when businesses are looking to save money and you're coming in and saying, hey, I could, instead of having another additional large capital investment intensive project right off the bat, is we can keep your equipment going for a little longer.
Yeah, it's about innovation. Isn't always about innovating a new product, right? Could be innovating the way you add value to your customers. Or the way you charge them, but it's one of the biggest things I see is people are afraid to charge because they're afraid to lose a client.
Robert?
Yeah, I would agree with that. Until someone says no, you don't know, they're going to say no. So ask.
You don't get what if you don't ask. So
That's right.
For our listeners that are just getting all these gems of advice, how can they, again, best reach out to you? Jane?
Jane at janegentry.com or Jane M. Gentry on LinkedIn.
Great. And Robert?
Again, it's Robert at CFO-Navigator.com.
Great. Thank you both.
Thank you.
Such a pleasure to be with you, gentlemen.
Yes, likewise. And then to kind of close us out here, this is a little bit what we call Anthony's financial take. So as you're all listening in, you understand that it requires a full team, using Jane's analogy of you don't just need a captain, you need a first mate, you need a helmsman, you need the engineer. I know a little bit more on the shipping side of things, like geek out on that. But what does this have to do with creating one's financial plan? Well, whether it's someone is running a family business or just running their own family household, it's not just a financial advisor one is working with. They would need an estate planner, attorney, they would need an accountant, and especially if they're working within a family business or partnership, they would need business attorneys and every other professional that we've kind of outlined a little bit here to create a well-path and well-navigated path towards wherever they want to go. If trying to run a ship without a helmsman or a navigator, good luck with that. So when working with a financial advisor, make sure that they are very well versed in working as a team with everyone else, because that advisor can't be both an attorney, an accountant, and everything else under the sun. So that's a little bit of my, Anthony Chen's financial take. Thank you for listening in to Family Business Radio.